Hello and welcome to new module called mortgage production, and in this particular lecture you're going to learn about what exactly the mortgage production and what all the things, what all the processes, what all the functions involved in the mortgage production as an introduction. Okay, so loan production or mortgage production is basically the process of creating a fully funded loan. It covers the loan life cycle from its primitive stages of client prospecting till the time the loan is closed and funded. The loan life cycle basically continues even after that when the loan enters a servicing and secondary marketing stage. What is the scope of loan production? As you see in this diagram, the total scope of the loan production is loan production and the loan servicing and the secondary markets. Basically, the loan production is part of the entire life of the loan. So while loan servicing and the secondary marketing, these are the two activities which happens parallel, but loan production does not happen in parallel with any other process. Okay, so let's look into a few other aspects of loan production. So if you just look, if you look at this particular, diagram, you can notice that loan production is one of the main stages in the loan life cycle, and other two important events such as the loan servicing and secondary marketing, which are happening in parallel. What is process flow? So the various stages which are involved in the loan production is as shown in the this particular diagram. As you can see, identify four distinct phases of the loan production process. First one is loan origination. When a prospective borrower gets engaged with the lender or the lender's agent asks for the basic data related to his loan. This data is used to generate some scenarios with a combination of interest rates, the loan amounts, points, the loan tenure, etc. for the borrower, and the borrower is required to log a certain rate scenarios. Basically, he has to log certain rate different interest rates, so he has to log those things, and out of the given whatever the lender offers or the broker offers, whatever the different scenarios, he has to log one of the rate scenario, and after which its loan can go to for the processing. What is loan processing? After a loan is rate locked, it goes through a series of activities where the different documentary requirements are fulfilled and the regulatory checks are done. So all these activities are part of the loan processing stage. The borrower may be asked for a lot of information and supporting documentary proofs about his employment credentials and his financial position, property details, and other assets, which are basically, and if he has any liabilities associated with the borrower. Various other reports like credit report, property appraisal, etc. are also required for the processing, which are basically filed towards borrower at this stage. What is loan underwriting? A lot of data is collected through the documents acquired in the processing stage. The data sets in these documents and reports need to be analyzed and churned together to generate the meaningful information about eligibility, overall credit worthiness of the borrower, and what all the risk associated with the loan applied by the borrower. All this is then factored into come out with the exact loan pricing to be offered to the borrower. And the final stage is loan closing and funding. After the loan is underwritten and the borrower agrees with the loan terms, the loan moves into the closing and funding stage when the actual contracts are signed and sent, the property is registered, and seller repayments or payments are cleared. So the various activities basically which are involved in the mortgage production. So as you can see, basically, let me just move on to the next stage. Actually, in this stage, I just thought of showing the loan origination, and then it goes for the processing, and loan underwriting happens. Finally, loan gets funded and closed. So this is a continuous process which is taken place by the lender. So if you look at loan production and what are the different entities who are involved in loan production, as you can see, like originators, basically they manage the lead, basically they solicit when borrower is filling the applications, and then loan pre-qualification, automated underwriting of the loan happens. Basically underwriting, which happens automated by, there are software tools which are available which can underwrite the loan based on the given parameters, and it will tell this particular borrower is whether is eligible for getting the loan or not. So there are various processes, if you look at the insurance agencies, so basically they will help the lenders to perform the risk scoring of the borrower. Mortgage insurance verification, which is done by the insurance agencies. Title agencies, basically they will make sure the title valuation, that particular property which is sold belongs to that person or not. And appraisal agencies, basically they performs collateral valuation, whatever the collateral given by the borrower is really worth of that money or not. So that kind of things are done by the appraisal agencies, and they would calculate the current market rate of the the property. And credit rating agencies, basically they would do the credit score modeling and etc. And closing agents, basically they would do the document tracking and document acquisition and disbursement of the fund, and many things are done by the closing agents. We are going to discuss about all of this in details. Every other function, every other activity will be discussed in detail in the later sessions. I hope you enjoyed this introductory session. I will see you in the next topic. Thank you.